And what I'm basically getting at is that permitting all of these paper claims to be created on the same amount of silver has allowed the pace of silver to be managed. And I think they're trapped. I really, truly do believe that they are trapped. And Shanghai's not making it easy for them. $4 premium on the Shanghai Metals Exchange. It started at 2, then 2.5, then 3, then 3.5, and now we're damn near $4. They are incentivizing all of the silver that can be sent east. They're incentivizing. Now, they are giving up some to the west, but what did they have to do? It appears that way. What did they have to give up to do that? What are they getting to do that, rather? What did the West have to give up to do that?
In today's news recap, silver price nears $29.50, eyes on U.S. CPI and Fed rate. Despite reduced bets for a September Fed rate cut and a strong U.S. labor market, the silver price regained strength, turning bullish around $29.44 and reaching an intraday high of $29.49. The upward trend is attributed to a slight weakness in the U.S. dollar, which lost some gains recently due to cautious sentiment ahead of the latest U.S. consumer inflation figures and the Federal Open Market Committee meeting on Wednesday. Additionally, escalating conflict and instability in the Gaza region have increased demand for safe haven assets, further supporting silver prices. This geopolitical tension is seen as a key factor in helping the silver price remain strong. The U.S. dollar has been gaining momentum, driven by growing investor confidence in the economy. Expectations for a Federal Reserve interest rate cut in September have dwindled due to strong labor market conditions and persistent inflation, pushing the U.S. dollar to nearly a one-month high. Investors are now focused on the upcoming U.S. consumer inflation figures and the monetary policy decision. The Fed may consider a modest 25 basis point rate cut later in the year, possibly in November or December. Now we'll show you the best clips of the latest interview. Info in description. Now smash the subscribe button, turn on notifications, and share this video with a silver bug. Enjoy the episode.
In the last 3 years, you look at a country like India as an example. The Reserve Bank of India just purchased 24 tons of gold in the first 4 months of this year, the first quarter plus, which is 1.5 times what they bought all of last year in 2023. We're seeing some very interesting things as well, in terms of the exchanges being bled down. And you look at, for example, what's happening right now off of COMEX. Just recently, 3 Fridays ago, we saw 7,560 kilo bars shipped out of the COMEX to Brinks, Hong Kong. Brinks, Hong Kong is a COMEX depository. And the conventional wisdom is that nothing goes to Brinks, Hong Kong that isn't what's called exchange for physical, where, these traders can buy in the West and deliver in the East. Now, China is offering a very nice arbitrage opportunity for the traders who have the ability to access both markets. It's about $4 an ounce in silver, not so acute in gold, but ask yourself this question: who the hell's got $571 million to purchase 243,000 ounces delivered off of COMEX to Brinks, Hong Kong? And the belief is that they are then trucked over, because these are all kilo bars, and the Shanghai Exchange deals in kilo bars. The mini contract on COMEX is kilo bars. So some entity, and some people think it's HSBC Bank. I don't know who it is, but I can tell you that $571 million worth of kilo bars were delivered to Brinks, Hong Kong. Some people believe it's then being trucked to the Shanghai Exchange, which uses kilo bars. And when you talk about the amount of central bank purchasing, it's off the charts. And I don't think we're even being told how much these central banks are buying. But when you realize that not only are these banks accumulating gold, it is a trend of repatriation as well. And, the Bank of India just moved 100 tons of gold quietly out of the Bank of England and took possession of it. And you go back a few years, you start with the Bundesbank in Germany, the Dutch National Bank, the Bank of Austria, Hungary, Turkey, Poland. We just saw the Bank of Saudi Arabia, several African banks and a couple more Middle Eastern banks all pull their gold out of the Bank of England and the New York Fed. So it's about slow repatriation. It's about slow accumulation, not too fast to raise attention. But what I really do believe is happening is that the Western suppression of metals, as foolish as it is, which has originally been there to to suppress the demand for gold in a low interest rate environment, which is obviously changing. They're using that suppression, the large short positions of the commercial banks, to drain the exchanges, to do exchange for physical, to drain the COMEX, to drain the LBMA, and now even pulling metal out of the Shanghai Exchange, because I think counterparty risk is something that is very acute. And the belief that, wealth is found in a broke country's debt, our treasuries, or a country that has chosen to inflate versus being prudent with their fiscal policy and the monetary policies. I think we are moving to a period of time where the rules are being changed, I guess is what I'm trying to say. It's almost as if gold and silver markets seem to be playing by a new set of rules, I guess is what I would try to say. And it's almost as if commodities, like Zoltan Pozsar said, this is Bretton Woods 3, a system surrounded by commodities. It's as if commodities are worth more than currency nowadays, and this is a rush to do so, but not so fast that it creates attention. And this is how they suppress the paper price and then deliver it. Take possession of $571 million worth of kilo bars in China when no one's looking off of the COMEX. This is a trend that I think you will see accelerate.
In the continuation of the episode, Andy Schectman, president of Miles Franklin, highlights a potential silver squeeze, indicating a strategic shift among major bullion banks known for their historically short positions on silver. His observations are particularly focused on their recent activities with the Shanghai Metals Exchange, suggesting a possible recalibration in their silver trading tactics. Schectman also points out the significant undervaluation of silver, emphasizing its investment potential against its real scarcity and industrial utility, which are not fully reflected in its current market price. On a global scale, Schectman discusses the shift in economic power from west to east, with countries like China decreasing their U.S. Treasury holdings while increasing gold reserves. This trend of de-dollarization and commodity-based wealth is echoed by other central banks, which are moving towards repatriating gold, thereby reducing reliance on traditional fiat currencies. Additionally, Schectman addresses possible manipulations in the silver market, noting discrepancies between reported trading volumes on COMEX and the actual physical silver available. This underreporting distorts true supply-demand dynamics, making market navigation and investment decisions more complex. For investors, understanding these nuances is crucial to recognizing both the opportunities and challenges within the precious metals market. Now we'll show you more clips, but first, hit the like button, smash the subscribe button, and feel free to send a thanks if you find our recaps valuable. Let's get back into the episode.
These countries are choosing sides, and I think that you will see countries like Venezuela join BRICS. Turkey just admitted that they want to join BRICS. Turkey's a NATO member, and they're talking about using Turkey to have as a jump off point for if they had to get involved in the war, where they would actually use Turkey as their airstrips and whatnot. Now they want to join the BRICS. What does all of this really mean? Look, I think if you look at the what's happening with the BRICS, it's legitimate, and it's hard to delegitimize it. You already have a larger swath of human population, a larger percentage of global GDP, 2 of the 3 largest nuclear arsenals on the planet, a larger swath of rare earth metals in the Eurasian continent, and gold and silver, and all of these commodities that are part of what you would need to build a real economy, and not opaque debt promises from an insolvent government. And if you believe what Zoltan Pozsar said, look at all the countries that they bring into the fold. These are countries that are massively resource rich and or have very strategic shipping lanes. And, I think this is a trend that will only continue. You add into it the Belt Road Initiative, which is, we've talked about before, the largest infrastructure project in human history, which is many of the same countries, including all of the OPEC countries. And you start to get into 85 to 90% of human population. Add into it the Shanghai Cooperation Organization and the Eurasian Economic Union. I've been saying for years that they will join. Jim Rickards has said that. And now you got the president of Belarus calling for a summit to bring these two organizations into the BRICS. The SCO, who Saudi Arabia joined as well, so did Iran. is the largest regional financial and military organization on the planet. These countries are finding safety in numbers, and I think it's just beginning. And that's the thing about the BRICS, is that they've done things very methodically. People think this is something that just happened. They're going on 18 years that this has been going on, but the acceleration, their coordination, their sophistication is growing, accelerating. And I guess we'll see how it all plays out in the big meeting in October. You know, who knows what our real gold reserves are? Who knows where the 12 billion in gold reserves that the Ukraine supposedly sold to fund the war went? Who knows where Saddam Hussein's gold went or Gaddafi's gold went? You know, I don't know. It's actually, I find it to be quite foolish that the Eastern countries are so open about their gold accumulation. And, you know, but it's not true how much they're accumulating. You got analysts from the Bank of Montreal. You got even people, I think, in the IMF who came out and said the numbers that we see are nowhere near what is actually being accumulated. And, you know, China's the largest producer of gold in the world too. They're not telling us how much they're producing. We have no idea how much they're really, truly accumulating. But I think it's very foolish. I think it's hubris. I think it's recency bias, normalcy bias. I think the West is if they really aren't accumulating any, they're asleep at the switch. This is a system where, look, if you look at a historical footprint, accepting treasury debt, the debt of another country, has a very small footprint in terms of being historically significant. And I think we're moving away from that. And when you weaponize the treasury and make it so that if we don't align ideologically, we're going to take it from you, only is incentivizing and accelerating the detreasurization, the de-dollarization, and the accumulation of gold, which has no counterparty risk. And this is the whole thing here. It's an asset, not only that has outperformed the bond market going back to 2000 handily, but it's an asset that carries, as Doug Casey has made famous his statement, an asset that simultaneously carries no counterparty liability. And it's true. And I think that's really what the world is realizing, that if, as Rick Rule says, you're not a contrarian, you're destined to be a victim. And if you're fully invested in dollars, you're destined to go broke. Well, that's the same thing that I think the central banks see and are acting upon. And the truth of it is that our media doesn't do a poor job of telling us this. They do no job of telling us this. And there are a lot of very sophisticated people in finance that are very well read. They just read the wrong stuff. They should be listening to you, and maybe they would have a better understanding of what is actually happening. But the flow of gold and silver, this decades-long standing trend of the price of gold and silver being determined by the Western institutional investors, it's breaking down. And again, I think the underestimating of the significance of this is a big, big mistake. And I think it will one that will wake up one morning. The West will wake up and say, what did we just allow happen? The prime example of it is the arbitrage on silver. You know, you have a $4 increase on the Shanghai Metals Exchange over COMEX, real damn near $4 an ounce higher. So the arbitrage is real. Any metal that can be purchased in the West and delivered to the East will happen at that level. And I think it should be the opposite of that. We should be hanging on and accumulating whatever we can. Instead, we're sending it all that way.
What do you think of Andy's point? Is the East taking over the metals? Will the US dollar officially be replaced by the BRICS nations? Post in the comments section down below your honest opinion on the complex situation we're going on. And watch this video right here because you'll love it. I see you on the other side.